Okay, hello. We're the group that will present on the financial analysis of the Maybank Group through years 2021 to 2020. So shown here is our poster for financial analysis, which we will first start with the introduction of the background of our chosen company. Movita?
All right, greetings, madam. I'm Movita, and I will be going on to the introduction of the company that we chose, and that is Maybank. As we all know, Maybank is the largest bank in Malaysia, and a number of financial industry subsidiaries is Malayan Banking Berhad. Um, Maybank provides a comprehensive range of corporate, private, and commercial bank services, and the group as a whole, known more popularly as Maybank, has also established a substantial presence in the local market. It has also banking presence in the majority of other Southeast Asian markets, including Brunei, Papua New Guinea, Indonesia, and Vietnam. This company also runs more than 20 branches in Singapore and also Philippines. Moving on to the products and services offered. One of them is consumer banking. Consumer banking, they offer such as fixed and savings deposits, remittance services, home loans, personal and home loans, hire purchases, unit trusts, and also credit cards. Next will be the business banking. They provide goods and services to businesses in Malaysia. For example, long-term loans like project financing, short-term credit like overdrafts and trade credit, and fee-based services like cash management and custodian services are among the company's goods and services. Next will be global market. Global market, they provide treasury services such as foreign currency, money market, derivatives, and capital market trading. Investment banking and securities broking are both included in the investment banking section. It offers a variety of goods and services such as corporate advisory services, bond and stock issuance advisory services for syndicate acquisitions, advice on debt restructuring, and share and future transactions. Underwriting all classes of general and life insurance business, offshore investment life insurance businesses, general takaful and family takaful businesses as well. Moving on to the financial performance by Don.
Okay, so for our financial analysis of the Maybank Group, we took years 2020 and 2021 as comparison towards each other using the financial performance indicators as shown in these three graphs. So labeled in the yellow columns is from the year 2020 and the green columns is 2021. So first we'll start with the return on equity and the return on asset ratios. And we can see that in the years 2020, in both ratios, it is superior compared to 2021. So this means that the company is able to utilize both its equity and its assets better to its returns than 2021. The next two ratios are the net interest margins and the net non-interest margins. So we can see here that 2021 has a better net interest margin and net non-interest margin than 2020. So this shows that there is an increased profitability in 2021 compared to 2020. And then we have the earnings spread, where we can see that in 2021 it's higher than in 2020. So that the meaning, this means that there is a bigger difference between the interest that the banks pay to its customers as compared to the interest that the banks can earn through their investing, thus increasing their profitability as well. So moving on to the next graph, we have the provision loan losses over its total loan or its equity. So we can see in these two ratios, 2020 has a superior ratio compared to 2021, which indicates that the company has better protection of their future funds from their provision of loan losses. So moving on, we have their cash and due from banks and their cash in securities over their assets, which indicates the liquidity of the bank. And we can see through the graph, 2020 financial performance is more liquid as compared to 2021 in green. And next, we have the equity capital over the assets, which indicates the structure of the company, where if a higher equity capital over assets will mean it's a more conservative company structure as compared to a lower ratio, which would mean it's conservative. So we can see that in 2021, it has a higher equity capital assets, making it more conservative than in 2020. So next we can go to the final graph where we can see the net bank operating margin. So in the net bank operating margin, 2020 is superior to 2021. And then we have the earnings per share. So earnings per share also indicates a company's profitability. And we can see 2021 in green, the earnings per share is higher than in 2020. So next we have the net profit margin. So we can see that 2021, the financial performance is better for the net profit margin than 2020, where the net profit margin shows or indicates the efficiency of converting the company's sales into actual profit. So next we have the loan to assets ratio. So the loan to assets ratio indicates the amount of debt the company has to pay as compared to the assets that are held by the company. So we can see in 2020, there is a lower loan to asset ratio. So a lower ratio means that there is less debt to be paid as compared to the assets that's held by the company. So we can see that the 2020 financial performance is better than 2021 with a lower loan to asset ratio. And finally, we have the operating efficiency ratio. So we can see that 2020 has a lower operating efficiency ratio as compared to 2021, where it indicates a smaller percentage of expenses that will be used for their net sales. So with a lower ratio, we can see that 2020 has a more efficient use of operations as compared to 2021. So from the above results of the financial performance, we can see that overall 2020 displayed better performance in first, the asset to profit efficiency, which can be seen in the superior return on equity and return on asset ratios. And also 2020 is superior in the future funds protection, where it has a higher provision loan losses ratio in both the total loans and equity. Next, the liquidity ratios in the year 2020 is superior to 2021 with the better loan to asset ratio and cash to asset ratios. And finally, 2020 financial year provides a better management performance as compared to 2021, as the operating efficiency ratio was lower. Hence, with these four performance indicators, we can tell that 2020 is a better financial year as compared to 2021. So that is all for our presentation, and this is a full view of our poster. Thank you very much.